This is the Global Economic Commodities Scrap Metal and Recycling Report by our Bentley Roll-Off Trailer and Open Top Trailer, September 28, 2020. U.S. weekly crude steel production fell to 1.446 million tons, near a multi-month high on continued slow economic growth. Crude oil price fell to $40.25 a barrel on slow global growth and excess inventory, despite Venezuela and Iran being mostly off the market. The future of high oil prices is bleak. The U.S. oil rig count rose to 183, still near a 10-year low, down 88.6% from the 2014 high. Slow economic growth and the non-carbon energy factor is keeping production down. U.S. weekly oil production fell to 10.7 million barrels a day, near a 2-year low. Low demand brings low prices, which brings low production, therefore bringing higher prices. Scrap steel number one heavy melt export buying price Philly was steady at $235 gross ton, near a multi-month high on a limited increase in global demand. Scrap steel number one heavy melt price was steady at $245 a gross ton on a slow global growth in demand. There is limited price pressure for October. Hot rolled coil steel rose to $30 per hundredweight, near a multi-month high on a slow demand increase and as higher scrap prices are being passed on. Copper price fell to $2.98 a pound, off the multi-year high on slow growth but nervous markets. Aluminum price fell to 77.2 cents a pound, off the multi-month high on the same slow growth but nervous markets. The Eurozone is an economy about the size of the U.S. Their consumer confidence in September rose to negative 13.9, well below pre-pandemic levels, but it is improving despite the COVID death rate rising in areas. The U.S. current account deficit with other countries is the total trade deficit, which includes goods, services, and income combined. The U.S. Q2 deficit widened to $59 billion, the worst in 12 years, and has trended worse since 2018. This means the results of years of trade deficit deals has resulted in more, not less deficits with other countries. U.S. orders for manufactured durable goods for August rose 0.4% from July, the fourth straight month of improvement. Transportation equipment and machinery were up, and motor vehicles and defense equipment were down. U.S. weekly initial unemployment claims rose to 870,000 as new job gains are slowing. Unemployment claims remain well above the 665,000 peak of the 2009 recession. COVID is getting worse, not better in many areas. U.S. existing home sales for August increased 2.4% to 6 million annualized, an outstanding 14-year high. Low mortgage rates, the improving job market, and moving to larger homes driven by work from home are all factors. Wall Street's Dow Jones Industrial Average fell 481 points to 27,174, the fourth straight week of declines. And that's as COVID cases are growing in the U.S. and globally, and the economy is slowing. The U.S. government is looking at an added $2 trillion plus or more of stimulus on top of the current $3 trillion, but it's not a given that that will happen. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.